What's up YouTube? Welcome to the weekend market review. I did not take a trade this week because it is the first week of the year and it's also NFP. So I just wanted to see what the market would do. There's no changes to the challenge so far. We are still 1.25% down. So let's take a look at the dollar on the daily chart here. We've been going lower here with 3 significant displacement. First one being here, second one, and the third one. I'm expecting a market maker sell model to complete with our target on the sell side being this low. We ended the year with this low right here, leaving this low right intact. That makes these two relative equal lows. And we started the year with a run up back into this CB. So that's a good case for our sell side objective right here, because we can consider this as a Judas swing back into premium of this leg to go down later. And I like how in NFP we dug up into this volume imbalance and this CB before crashing down back into this fair value gap to retrace back into the range before the close. If you take a fib from this high to this low and you find equilibrium, you'll see that last week we closed right at equilibrium right here. So next week, if we get a displacement below this low on a closing basis, then I think we're gonna be back in motion to go for these relative equal lows and eventually this sell side right here. So last week I was curious as to why we made a low here just above this low and just not take it out. And I found that answer on the monthly chart. We take a look at the monthly chart. We dug up into this CB before having a nice displacement down. And now we're back inside this busy right here. And if we take a look at this candle right here with the long tail at the bottom, we take a fib and draw out from the high of the tail to the low of the tail. And you get equilibrium. What level do we get? Right there, smack in the middle. So this was the monthly tail CE right here, and we pierced it just a little at the end of the year, leaving this low intact. I see this as a speed bump, creating these equal lows. It gives a reason for us to retrace back into the CB, into the premium of this leg, just so that we can target these levels at a later time. Now there are relative equal highs here, but I don't think that we need to take this out before taking out these lows, because we have this CB here. That's a pretty strong displacement down, and I think that's good enough for us to take price down lower. And if we take a look at the left side of the market maker sell model leg right here, we also have these down close candles. Draw it out in time, it matches with this CB and also these up close candles, which makes it an order block. This, I'm seeing if it wants to act as inverse order block and keep price down. And if we take a look at its up close candle before the down move right here, I'm seeing this acting as a reclaim order block. So there's a lot of PD arrays here working against the idea of a higher dollar. There's a lot of PD arrays that it needs to drive through. So I'll be looking for reasons to go short on the dollar. I want to see displacement on the downside. That's where I'll be more comfortable with holding a position. Let's take a look at euro. It is the inverse of the dollar. If our target for dollar is sell side, then for euro, we have this buy side to consider. We had a nice run up here after digging into this busy right here. If we had to retrace any lower, then revisiting the high area of this busy is reasonable, but I don't want this low to be jeopardized if we are to keep our bullish bias for this. In euro, we left this high just below this high, which makes these relative equal highs. But why here and not just take it out right there, right? I also found the answer for this on a monthly chart. So in the dollar, before the move down, dollar retraced into its CB, but on the euro, this equivalent of busy we did not reach. I see that as a type of SMT. So where are we right now on the monthly chart? We've been ranging pretty much the whole year of 2023, but where, right? My attention is on this candle right here. This is a mitigation block. We have a high, low, 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 then a break. Now we've retraced back inside this range of this candle. But what is the significance of this candle, right? What is the date of this candle? It is the March 2020 candle on the monthly chart. And we all know what that was, right? There's a lot of unfinished business here inside this candle, and we spent the entirety of 2023 just ranging inside of it. If we take a look at this candle right here, and look at this long wick, you take your fib from the high and the low, and you draw it out in time, what level do you get? Here's the CE of this monthly candle, and we hit it right smack in the middle. Right there. So this high, right below this high, is the monthly wick CE. We've had a nice reaction off of it. But is this PD array enough to take us all the way down to the low of the 2020 March range? Right now, I don't think so. I see this as a speed bump to give us a reason to retrace lower back into discount of this leg. Maybe coming back into this busy or also this busy, just so we can attack this buy side right above these equal highs. Let's take a look at ES on the weekly chart. Our draw on the buy side is this buy side and eventually here. This is the balance adjusted chart. And if you turn that off, you will see that we've actually already pierced this and this. So we're looking at the balance adjusted chart so we can still glean from this old information. It's kind of like a Six Sister concept, but with contract rollovers. So we had a nice reaction off of this order block here on the weekly time frame. And if we are to pair it with the left side of the market maker buy model, we have this PD array in the form of a reclaim order block matching this order block, sending price higher. And right now we are back inside this busy that we can couple with this old CB right here. But it is also acceptable if we are to retrace deeper back into this reclaim order block, because we also have this busy waiting on the discount of this leg right here. But for now, our draw is still here and here on the buy side. So if we just use this and this, or we dig deeper into this and this, we'll still be looking for reasons for a displacement higher into this buy side. Lastly, let's take a look at NQ. Looks pretty easy. Our draw is these relative equal highs, buy side. And if we turn off the balance adjustment, we will see that we already taken this out. So we're just toggling between the two, just so we can find better information for us to use. This is like the same thing with ES, is Six Sister, but with contract rollovers. We had a nice retracement here back into this busy, and while using that, we just placed up, taking out this high and these relative equal highs again. If we take a look at the left side of the market maker buy model leg, we can pair it up with old PD arrays, this busy. We can pair it up with this reclaim order block, and this CB, and this breaker, low, high, low, low, break. So how many PD arrays are there? 1, 2, 3, and 4. Gave us a pretty nice reaction right here. Going forward, while trying to reach for this high, we can expect NQ to reach back into this old SIBI right here. We can see that we have a busy matching with this old SIBI right here, and it's at a relative discount of this leg right here. So if it does want to come here, we'll want to see if it displaces up so we can target this high and this high. Yeah, so that's it for our simple weekend market review. We are expecting lower prices on the dollar off of that SIBI to reach the sell side target. And if it does give us that, then we can expect other markets to fall into place. Yeah, so I'll be seeing you guys soon. Bye-bye.